Welcome to DF Markets Fibonacci Tools. Fibonacci Tools. The Fibonacci tools use the mathematical ratios underpinning the Fibonacci number sequence to measure price swings and identify specific levels that could serve as key turning points. The two main Fibonacci tools are the Fibonacci Retracement and the Fibonacci Extension. Fibonacci Retracement. The Fibonacci Retracement measures a price swing and highlights levels within the swing that can act as turning points if price retraces to them. The key levels to monitor are the 23.6%, 38.2%, 50%, 61.8%, 78.6% and 100% retracements, which the tool automatically plots on your charts for you. In the example, you can see we have a bearish retracement. Price has sold off from point A to point B, and as price starts to retrace, we can apply our Fibonacci retracement tool from point A to point B to plot our Fibonacci levels. As you can see, price retraced to the 50% level before reversing and selling off again. In this example, you can see a bullish retracement. Price has traded up from point A to point B and then starts to retrace lower. This time, because it is a bullish move, we apply our Fibonacci tool from point A to point B to plot our Fibonacci levels. As you can see, once again price retraced down to the 50% level before stalling and reversing higher. Fibonacci Extension. The Fibonacci Extension tool is slightly different. With the retracement tool, we measure from A to B to find a potential C point. We use the Extension tool once the C point has been found because the tool has 3 reference points, allowing us to measure from A to B to C. In the example, you can see we have a bullish extension. Price moved from A to B, then retraced lower to C. Once price starts moving higher from C, we can apply our extension tool from A to B to C, and this will plot the key extension levels above the market. The key levels to monitor are the 61.8% extension, the 100% extension, and the 1.618% extension. As you can see, price trades up to the 61.8% extension, where it finds initial resistance before trading higher again and moving all the way up to the 100% extension before reversing and selling off. In this example, we have a bearish extension. Price has sold off from A to B and retraced to C. Once price starts moving lower from C, we can draw in our extension tool from A to B to C, and this plots on our extension levels. Notice how price moves down to the 100% and finds strong support before eventually going lower. Then notice again how price trades all the way down to the 1.618% extension before reversing and moving strongly higher. Fibonacci levels can be incredibly powerful turning points. However, it is important to note that the tools do not tell you which level to trade, they just highlight the key potential turning points.